If you're a freelancer and today is anywhere close to September 15th, you're staring down two deadlines that don't care about your excuses. Q3 estimated taxes are due, and if you filed an S-Corp extension back in March, that final return is due the same day. Miss either one and the IRS charges you interest at 8% annually right now. That's the current underpayment rate the IRS published for the third quarter of 2025, plus a failure to pay penalty of 0.5% per month on top. The Treasury Inspector General reported that individual taxpayers paid roughly $7 billion in estimated tax penalties in 2023, and freelancers are massively overrepresented in that number because nobody's withholding for us. Every week you wait past the 15th, you're literally paying the government to hold on to money you already owed. Stick with me because I want to walk you through the exact number to send, how to figure it out in about 10 minutes, and the two mistakes I see 1099 earners make every single September that turn a boring deadline into a real bill. Okay, so let's talk about what September 15th actually is, because most freelancers I talk to think it's just another tax day and don't realize it's really two separate deadlines colliding on the same date. The first one is Q3 estimated taxes. The IRS wants self-employed people to pay income tax and self-employment tax 4 times a year. April 15th, June 15th, September 15th, and January 15th. September 15th covers what you earned June 1st through August 31st. The second deadline is for S-Corp. If your business is taxed as an S-Corp and you filed Form 7004 back in March to get a 6-month extension, your final 1120S return is due September 15th, not October 15th like a personal return. I see people miss that one constantly because they assume every extension runs to October. It doesn't. And the S-Corp late filing penalty is brutal. $245 per shareholder per month for 2025, up to 12 months, according to the IRS. 2 shareholders, 6 months late, that's almost $3,000 in penalties on a return that might show 0 tax due. Wild. Now here's where I want to slow down because the quarterly formula genuinely is simple once someone shows it to you, and I think most freelancers overpay because they've been guessing. There are 2 ways to calculate what you owe on September 15th. Path 1 is called Safe Harbor, and honestly, this is what I'd do if your income is unpredictable, which, if you're freelancing, it probably is. Safe Harbor says, if you pay in either 100% of last year's total tax, or 110% if your adjusted gross income was over $150,000, the IRS can't hit you with an underpayment penalty. Doesn't matter what you actually earn this year. So you take last year's total tax from line 24 of your 1040, divide by 4, and that's your quarterly payment. Done. Path 2 is annualized. You estimate your actual 2025 income, calculate the tax, and pay a quarter of it. That's more accurate, but way more work. And if you're behind, forget it. Just use Safe Harbor. Let me actually run the numbers because this is where it clicks. Say last year you earned $90,000 net from freelancing, and your total tax on line 24 was $18,500. Under Safe Harbor, you owe $4,625 per quarter. If you already paid April and June, that leaves $4,625 due on September 15th to stay penalty-proof. That's it. That's the number. You don't have to reconcile anything until April. And if you had a monster year and made $200,000 this year instead of $90,000, you still only owe $4,625 on the 15th under Safe Harbor. You'll owe the difference in April, but no penalty. This is why I'm allergic when people say quarterly taxes are complicated. They're arithmetic. The reason it feels scary is nobody explained the formula, so freelancers guess, overpay by thousands, and float the government an interest-free loan for a year. Don't do that. Here's a wrinkle a lot of people miss. If most of your income landed in Q3, say you had a huge August, or you sold a product launch, or a client finally paid an invoice from May, you can use what's called the Annualized Income Installment Method on Form 2210, Schedule AI. Instead of paying equal quarters, you match your payments to when you actually earned the money. This matters for consultants with lumpy income, real estate agents who close deals in bursts, and anyone with a seasonal business. The IRS assumes income arrives evenly across the year unless you tell them otherwise, and if yours doesn't, you can get penalized on Q1 and Q2 even though you paid your full annual tax by December. Schedule AI fixes that. My take is, if your Q3 income is more than double any prior quarter, it's worth the extra form. Otherwise, stick with Safe Harbor and move on with your life. The self-employment tax piece is what surprises people who are new to 1099 work, so let me be direct about it. When you're a W-2 employee, your employer pays half your Social Security and Medicare, 7.65%, and you pay the other half. When you're a freelancer, you pay both halves. That's 15.3% on the first $168,600 of net earnings for 2024, and it goes up to $176,100 for 2025 per the Social Security Administration, on top of your regular income tax. So on $90,000 in net freelance income, you're looking at roughly $12,700 just in SE tax before a single dollar of income tax. This is the number that wrecks first-year freelancers. And it's why I tell every 1099 earner I work with to set aside 25 to 30% of every deposit the second it hits the bank. Not after expenses, not after Netflix. The second it hits, your bracket matters. Someone in the 12% bracket with a spouse's W-2 income covering the standard deduction can get away with 22%, and someone single in the 12% bracket needs closer to 33%. But 25 to 30 is the range that keeps most freelancers safe. Let's talk S-Corp for a minute, because if you're one of the roughly 5.1 million S-Corp the IRS processed returns for in 2023, September 15th is your hard deadline. The return itself is Form 1120S, and it needs to include a K-1 for every shareholder. Here's what most S-Corp owners get wrong. They think filing the 1120S is separate from their personal 1040. It's not. The K-1 flows onto your personal return, and if you extended your personal return to October 15th, you literally cannot file it accurately until the S-Corp return is done. So September 15th isn't optional prep work, it's the gate. And the reasonable compensation question, how much salary you paid yourself as the owner, is the single biggest S-Corp audit trigger the IRS flags. If you took $120,000 in distributions and paid yourself $20,000 in W-2 wages, the IRS is going to have questions. Fix that on this return, not next year. Now let me tie this to something I harp on constantly, because September is genuinely the last clean window to do it. If you're an S-Corp owner and you haven't opened a solo 401k yet for 2025, this is your reminder. For 2026, employee deferrals go to $24,500, catch-up at 50 is $8,000, and the super catch-up for ages 60 through 63 is $11,250 per IRS notice, $2,567. Total defined contribution limit hits $72,000. Those are massive numbers, but you have to have the plan established, and for the employee deferral piece, you generally need to have elected it before year-end. Every September, I get a call from someone who realizes in March they could have sheltered $40,000 from tax and it's too late. Don't be that call. Quick reality check on payment mechanics. Pay through IRS Direct Pay at irs.gov. It's free, it clears same day, and you get a confirmation number. Don't mail a check. The IRS processed over 261 million returns and forms in fiscal year 2024, and paper is where things get lost. Direct Pay, EFTPS, or your state's equivalent. Take the screenshot, save it in a folder called 2025 Estimated Taxes, and forget about it until January. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If this helped clear the fog on September 15th, hit subscribe. I put out a new video for 1099 earners every couple of days, and the tax calendar series is running all month. If there's a specific freelance tax or retirement question you want me to unpack next, drop it in the comments and I'll pull it into an upcoming episode. Next up, I'm breaking down the mileage log that actually survives an IRS challenge and what the new 72.5 cents per mile rate means for 2026. See you there.